some more earnings which have been coming in. Shankha Banerjee, Group CEO, Dr. Lal Pathlabs is joining us now to talk about numbers. Very good numbers, Mr. Banerjee. And moreover, the street is quite happy with the kind of visibility you're given ahead. So talk to us about this quarter, and also what gives you, such strong confidence of, maintaining margins at 27% in the medium to long term?
Yeah, no, thanks for the compliments. I think it's the quarter has come quite well. We've done about 11.3% growth and about 28% in terms of EBITDA margins. So we have anyway guided margins in the range of 26 to 27%. And I think the bias is more towards the upper end. And margins is in our business, we've always said is better to look at margins over maybe the annualized number, because there are seasonal ups and downs which happen. The terms of the growth, and we continue to invest into growth. We are opening new labs as well as our tier 3, tier 4 expansion strategy is kind of bearing results, fruits. So that gives us the confidence that we should be able to maintain these growth rates going forward.
Right. Also, if you could, talk about how your, the big core markets of NCR, etc., are going. That's the, the mothership, and also now the future growth is likely to come from the smaller towns. So, are you going to come up with a new brand of outlets over there, slightly, or the same quality kind of network would come up in tier 2, tier 3 as well?
So currently, our core market, Delhi NCR, contributes to about 31% of our revenues, and is growing in high single digits. And we hope to keep maintaining that, because we've got quite sizable market share, and therefore maintaining that growth rate will be the objective. As we go into others now, the strategy is multifold. It's not only about tier 3, tier 4. You see, tier 3, tier 4 towns, we are focusing on them in our brand strong geographies in north and east, whereas in markets in south and west, we still are trying to work on clusters which are more tier 1, tier 2. But our branding as well as the service and other elements are actually common across all tier clusters. The quality, and there is no differentiation between any of the town clusters or any geography that we go. It's the same brand, and you should expect the same service and same quality.
Sure. So, Mr. Banerjee, what is it going to translate to in terms of numbers? Because both your volume growth for this quarter and your margins have been quite impressive in a seasonally weak quarter. Can we expect volume growth of mid-teens?
So, we've been saying that volume, there are two kinds of numbers to look at volume. One is patient visits, and second is also samples. I mean, tests conducted, that's also a volume number. Now, one trend that we are observing is that, the uptake of the health checkup packages has really gone up. And that is really contributing to an increase in the number of tests per patient actually going up. So our volume numbers on sample basis has grown by about 9.6%, close to about 10%. We are obviously trying to see how we can improve patient visits numbers as well going forward. However, mid-teens in terms of volume is something which is a bit away. I think we would first like to get into our whole sample growth number into double digits first, and then we will see how we can take it up further.
Okay, fair enough. What about Suburban? Because you're very confident about reaching double-digit growth over here. What is driving this optimism?
So in Suburban, our strategy has been to focus on three core markets, Mumbai, Pune, and Goa. Although the overall results of Suburban are still high single digits, but the core market performance has kind of moved into double-digit growth territory. So that gives us the confidence going forward as we keep, doing our revenue contribution in the core markets, keep increasing. The overall picture for the company will turn, and we'll start seeing double-digit growth there as well.
Right. Okay, so going forward, you've spoken about the volume growth this quarter and the medium term. You've spoken about how tier 2, tier 3. How are your cash flows, really supporting your expansion plans, or would it require some raising of funds going forward in future?
So as of now, I think our cash flows, touchwood, are quite stable. We are generating quite a substantial amount of cash. Also on our books, the net cash position is close to about, slightly ahead of 1,000 crores. So we have enough cash to really support all our expansion programs that we are building. There may not be a need to raise capital for our organic expansion. However, there is also, as a strategic tool or initiative, we continue to look at possible M&A opportunities. If there are sizable M&A opportunities, then we may have to look at ways and means of how we want to fund that, but that's for a very specific task. I think all our organic growth, we should be very well be able to manage with our internal cash accruals.
Right. Mr. Banerjee, that's quite interesting. Seems like you've already identified some target. I mean, the market has been talking about as to how South India is a priority for you. Shall we connect the dots here?
No, I don't think, we should be, trying to take too many messages out of what I'm saying. I think it's a stated strategy, but however, we got to get the right kind of, platform, right kind of, targets, and then, has to meet the valuation expectations, the type of governance that goes into those assets. So it's not a very short-term thing that we are immediately trying to go and close a lot of deals. But yes, we will continue to be on the lookout, and we are a bit choosy in terms of how and when we kind of go into another M&A.
We will be looking forward to an official announcement and chatting with you then. Thank you so much for taking the time out.
Thank you. My pleasure.
Okay, that's the word coming in from Dr. Lal. Interesting the space has been, and so have been the numbers. But what